Hi, everybody. My name is Paul Chato, and I'm going to walk you through some concepts today if you're open to it. I'm doing this video because I'm offering a more technical uh, perspective on D7 and the democratic economies generally, and how the investment process would work and how you can invest in traditional securities, what meaning the currency would look like. So I added in some times here in case you want to snapshot this so you know when certain sections begin. And also how we could make money by investing in nonprofits or employee-owned organizations, how those could provide a return to investors and what that might look like. Granted, I mean, I don't want to limit it to just investing in these type of organizations. There could be others that, well, there's many different types of organizations out there that we could invest in. How we could stabilize the currency and some other odds and ends. The website has a link to the diagrams I'm going to walk through on Miro. And so you can click that link on the D7 Explained page on the website. The link is also in the YouTube description. If you haven't already heard the audio, you might want to hear the audio because it's like the audio is more high level. This is more technical, but up to you. On the website, there are use cases as well that you can review. When I mention the word gift at several points in here, I'm changing that word to the word transfer going forward because I don't want to ruin the meaning of the word gift. But it's basically a transfer of ownership. I am going to do a video on how would you transfer or gift an investment after you have the investment. And it's like selling essentially. And then I'll also do one probably in that same video on how you would distribute regular gifts to shareholders, to stakeholders, which is similar to like a dividend. This is the public disclosure for the model I developed. I don't believe that it is patentable, honestly, because it is a process that is financial in nature. But even if I do patent it, the idea is I'm giving it away so that other democratic economies can use it and leverage it and make improvements and maybe share those improvements as well. And on the Miro, it does get into the D7 organization itself, has a diagram here and some notes, as well as democracy and accountability and what that might look like, and some notes on the technology. You can review that if you'd like to. There might be more diagrams in here at some point, but this is what we got right now. I do not speak a lot to the technology. The technology is not super complicated, and it's probably part of the reason I didn't delve into it. But there are some notes in there as some of my thoughts on that. And I'll call out that there are some other aspects of the system that I haven't fully documented. And so there will be additional videos. So I did confirm with 3 different securities lawyers that the financial instrument that we're creating would not be considered legally a security in the United States, and thus would not be regulated by the U.S. Securities and Exchange Commission. At the same time, none of them would put it in writing for me because, as they each mentioned, judges give opinions, not lawyers. And on right after I talk about the investment process and the currency creation process with Colin and Caitlin, I will get into a little bit more details. I talk a little bit about it with Colin and Caitlin, but I'll get in a little bit more detail. So I will admit that some of the transitions are a little abrupt. I do apologize. I'm going to move into the recording with Colin and Caitlin, where I kind of explain the investment process to them and the currency creation. Hi, everybody. I'm here again today with Colin and Caitlin. Thank you, Colin. Thank you, Caitlin.
Hi.
Hi.
We are, I'm going to do a demo with them real quick, where I share, they had mentioned in the previous recording that it could be helpful to have some imagery, diagrams and stuff for certain pieces that were a little bit more complicated. And Colin and Caitlin have, I explained this a little bit, so y'all might
kind of recognize this, but for everybody else. Janice is an individual user in this system. And then there's a pizzeria, right? And this pizzeria has a joint account. And these are the three individuals that are part of this joint account in the system. Technically speaking, this might live as an LLC in the traditional economy, or a nonprofit, or a corporation. Okay. And so in this case, Jennifer, Acklin, and Craig are members of that joint account. And this joint account is, all the joint accounts are majority rules. And so it's in a way, it is a democratic joint account. And then, so Janice says, okay, hold on. Does anybody, either way, don't have any questions about this part so far? So in this case, Janice is like a patron at the pizzeria, and she likes it. She's like, and the pizzeria is trying to expand. Maybe they want to do some marketing, or they want to open a new restaurant, or they want to, add on or something like that. And they have a joint account in the system, in the D7 system. It's you price your see, you price your stakes. They're called stakes in this case, not shares. Like in a traditional economy, it would be like a share of a corporation, or a stock in a corporation. In this case, it's called a stake, because essentially you have a stake in the future of this organization. Jennifer and Acklin and Craig may say, okay, well, we think our expected revenue is $1 million a year. And in this system, instead of being based on expected profit, like in the traditional economy, it's based on expected revenue. And so based on that, and they say, hey, we want to have 1 million shares. And so it's probably going to be based on the traditional economy. And so this part, I'm like, I know that expected revenue can be tied to a share price, but the ratio of that depends on the industry, right? And so for the pizzeria, I don't know what the ratio would be appropriate here. Analysts are going to look at that, and they're going to look at the traditional economy, and they're going to say, this is what the ratio from capital to share price should be based on revenue for this particular industry. Okay. And so they're probably going to want to talk to somebody maybe to get an idea of that. But essentially, they'll say they did their homework, and they're like, okay, we think for a given stake, it's worth $10, which, in the beginning would be worth about 10 D7 credits. And so receive a gift of $10. Yeah, so there we go. So the joint account holders can note in the D7 system the total number of shares, which we said was 1 million. The number of shares they're currently suggested outstanding. So they're like, they may say, hey, we only want 10% of those to be on the D7 system, because there will be other democratic economies, and they're like, well, we want to spread the love, right? So we don't have a single point of entry for people that want to invest in our organization. So they said 1 million, and then they said 100,000 of those, 10%, are going to be their current suggested gift, and our current outstanding, and the suggested gift is, in this case, $10, or and 10 D7 credits. So one thing I forgot to mention is that, like, but she could gift either these D7 credits to the pizzeria joint, or she could gift the off-platform gift in dollars or something like that. They probably wouldn't ask for both, like I said here. So it'd probably be or but it depends. It depends on the organization as to what they want. So it's just calling that out. Joint account worth, in this case, I'll put 8 credits. Crap, we gotta change that, but fine. So 8 D7 credits. And then she creates a share with 8 D7 credits. Gotta change that now so it's less. It's almost easier to change the other one.
Just change that to 10 and we'll pretend that there's
Okay, we'll pretend there's 20 in here.
20 boxes, yeah.
And so what she's basically doing is saying, okay, I like this pizzeria, and I'm going to create a share in a stake in that pizzeria. And then I'm also at the same time, I have the option, not required to do so, but I can create twice as many credits as the share. So I also create 20 credits at that time. Now, at that point, and this is important, she owns this stake. She owns this stake. And some of this stuff I'm just like I just changed it from a share to a stake because I talked to a securities lawyer and they're like, you should probably use it as you should say not share because that legally could maybe get you in trouble. And so I haven't changed this. I changed the other diagram, but I forgot to change this one. I'm very human. I'm so human. But okay, so imagine that says stake up there. But so what she does is she creates a stake worth the 10 credits, and she now owns this stake. She's a stakeholder in that organization, and she owns these 20, we're going to pretend, D7 credits here. And at that point, she can walk away. Okay, she can't. The pizzeria not only did not sell her a stake, they also can't stop it because they have a joint account in the system. Someone can create a stake in that organization with or without the permission. So in that way, it is not in a contract because there's no acceptance. Or you technically could do it on an individual account. Okay, so then after she creates this stake and she's got these credits, she has the option to give a gift to this pizzeria. She's not required to do so, but it's kind of a nice thing to do because you just basically created a stake in their organization, and like that stake could gain in value or it could, over time, and you're basically can benefit from their efforts, but if you didn't give them anything, that's kind of not very nice. And so she does that. She chooses to give them, in this case, she gave them 8 credits, but we're going to pretend that that's 10 credits because that was their suggested gift, right? And then she also gives them $10 as their off-platform gift, right? So we're not really tracking that on the D7 system. That just happens off-platform. We don't know. Only the pizzeria and her are aware of that. But we can't see this within the D7 platform. And that gift is exactly that. It's a gift. Because technically speaking, at this point, she owns the share, she owns the credits. She doesn't have to give them anything. And if anything, she's giving them money for a smile, right? To basically just to not to be grateful and to not ding her, right? Because if she were to give them nothing, and this is the accountability piece, which is important, right? If she gives them nothing, either party can ding the other party on the transaction, right? And a high percentage of ding transactions can result in account suspension, right? And so if she did that repeatedly, then eventually her account might get suspended and she might lose privileges basically on the platform. And that's how we can do this, basically. And she can also ding the pizzeria if the pizzeria is being, unreasonable in their request or whatever. Then she can ding the pizzeria, and all the other stakeholders can also ding the pizzeria if they're being unreasonable. And in the ding, if the pizzeria gets dinged, the pizzeria gets to decide how that ding gets distributed among the individual account holders. Because it could be that one person individual, either present or past, made a decision that made their lives pretty difficult, right? And so they can, but it's a combination of who was on the account when the share was created and who was on and who's been on the account since then. They all together basically get a vote as to where that name goes, so that you can't, blame somebody from the past just because they're not here anymore, whatever. But it does have some accountability so that within their organization, they can be like, well, we weren't all being, jerks in that scenario. There was somebody individual. And then, okay, so that, well, I'm paused there for a second. Does that make sense so far?
Mm-hmm.
Makes sense to you?
I think so, yeah. It's nice to see a visual representation of what we went over last time.
And where is the 2-for-1 ratio? How is that governed, or did I miss that?
So, that's TBD, basically. In the beginning, we might have the initial users have like a 10-to-1 ratio. I think my initial expectation was that it would be like 10 times, but this is probably, most users are going to probably end up here where it's like more like a 2-to-1. And so,
Right. And the reason that they're getting 2-to-1 is to incentivize people to use the D7 system.
yes, yeah, pretty much. That's how the credits get created, and so it's the only
Right.
place where it gets minted during the state creation process.
Right.
So without that, then we would not have any credits at all. And so yeah, somehow it has to. And yeah, go ahead.
No, that makes a lot of sense.
So it's a 2
Okay,
times
so
multiplier.
one credit is worth, or one stake is worth credit.
Can create 2 times as many
Okay.
credits as stake is worth. That's a good word. But that kind of makes sense though, right? So if you have, she creates one a stake worth 10 credits.
Mm-hmm.
She can create 20 of these,
Okay.
and then she can gift
Then
over.
she gifts them. Yeah, yes.
That part makes sense.
That, and I think I'm following, yeah.
Does that make sense, Colin, to you too?
Mm-hmm.
And so we're pretending this is 20. We're pretending this is 10. If that makes sense. That's pretty much what makes all this thing possible, this whole thing possible legally, right? Without this, like this is basically like, the thing that I invented that makes it possible for us to invest in any organization, not just corporations. It's kind of exciting for humans, for me at least. Oh, and so one of the element of this is a democratic, right, organization, and they can also volunteer their diversity, right? And so if they have the diversity of the organization, what kind of they have women as their leaders, or minorities as leaders, or whatever, and we have the option as we go into, and they can put that on the joint account and have that linked in, right, basically based off their individual account holders, and it gives you the option to be like, well, I want to invest in organizations that are diverse, essentially. Thank you guys again for time and for bearing with me on this, and I thank everybody out there for anything you can do to help us move this along.
Absolutely.
Thanks, Paul.
Thanks, Paul.
So,
Same.
So I did want to call out that it may make sense to price a stake based on in the same way that shares are priced today for corporations. At some point, the organization will be as big as it wants to get, and once it reaches that size, an organization could give a dividend in the form of a gift to their stakeholders if they chose to do so. And I haven't documented that process, as I mentioned, but that would be an option. And so that way there would be some long-term benefit. And in that case, it might make sense to price the stake according to what the expected dividends are for that organization.
in this system, you have so much more transparency, and with the other democratic economies too, we'll be able to have a lot of transparency as to how much money is coming into the any given organization and where that money is going, and as much transparency as the organization wants to reveal. You would get real-time data as to donations or revenue, and it wouldn't be quarterly reporting; it would be real time. And so it's actually it's kind of nice that way. Okay, so then I'm gonna explain why this is legal for a second. And it's kind of an important part, right? So for one, the stake is in a contract, because the pizzeria can't prevent its creation, and so the acceptance does not occur, right? They can't stop Janus from creating a stake, even if they wanted to. You can create a stake against a joint account. You can create a stake against an individual account if you wanted to. And technically you can't stop them. And so for that reason, acceptance does not occur. And so it's not a contract. The second reason is that it is not a security. And why is it not a security? Okay, so the Howey test is the litmus test for why something is considered a security. It's an investment of money in a common enterprise with an expectation of profit to be derived from the effort of others. In this case, the investment of money, when the money moves from Janus to here, when the money moves from Janus to the pizzeria's joint account, that money is not with the expectation of profit to be derived from the effort of others. The money is to not be dinged. She's trying to avoid being dinged. I mean, you could argue it's a thank you gift, but in any case, she doesn't need to give them money in order to, to gain profit from their efforts. She already has that. She owns that stake outright after she created it. It's in her hands. And so the money that she's giving is not for the stake itself, but for to avoid being dinged. And that is a small difference, but it is a significant one, as it turns out, because that makes it a gift. And it's not even the money that she gives is not even a payment for necessarily to avoid getting dinged, because the pizzeria didn't promise that they wouldn't ding her if they give her if she gives them the gift. They could still ding her. They still have that right, and it is that ambiguity that allows us to do this. It creates a level of risk, which is why the ding is in place, and so we can hold each other accountable. But that ambiguity is what makes the whole system possible. I did want to call out that if folks do get dinged and their account does get suspended, there is an appeals process, and it's outlined on the website. And potentially we might have the ability for folks to remove particular dings if there might be a process for that as well. So just calling that out. Also on the website, it has the process flow for the stake and credit creation process. If you're more comfortable with that format or you prefer that format is also available where it says D7 in diagrams, Miro. So I realized that it might be helpful to explain how this potentially could work if you have like an LLC or a nonprofit or a corporation, a legal entity. That way you can have the protections of that legal entity and still leverage the D7 system. And so I just wanted to show that real quick. So in this case, it's a similar situation where it's a pizzeria, but the pizzeria exists as an LLC. And so you can create an account in the D7 system. It would be an unverified account because it's not a human. And so you wouldn't have the same voting rights. You couldn't create currency and, but you can still have the account similar to what you would do with any other cryptocurrency today. And so you'd have the LLC account, and then you could pass that money back to a joint account for the pizzeria. Or you can pass it back this way, or you can, pass it to, if you wanted to anonymous accounts. If you wanted more privacy than that, and then you can go off platform with it, move the money off, sell the money off platform, or move to other anonymous accounts or to verified accounts at that point, whatever you want to do. But that would give you the option to both have, to have the legal protection of that LLC prior to hitting the joint account. So I did want to call out here too that if Janice were to ding this Pizzeria LLC account, that ding would get passed on to the next verified users. In this case, it would get passed on to this joint account that has these verified users on it. And if this account didn't have any verified users, the ding would get passed on to the next verified users, whoever's next in the chain. That's one way that we'll make sure that Janice still has the option to ding the users on the other side of this pizzeria, this anonymous account, or this unverified account. Also, there will be the option where a certain amount of privacy around individual investments and how much money you have in your accounts can be enabled. In addition to having the option to have an anonymous account, you would probably have an option to have some privacy around your own individual accounts. Okay. So now what I shared here is like, this is how you would invest in these new type of organizations, these joint accounts that these democratic organizations that exist in the D7 system. They may exist outside the D7 system here, like we showed with the pizzeria. It exists as a business outside of it, but they can raise capital here on the D7 platform. But you can also invest in traditional securities in addition to these other these type of joint accounts. And so that's what I'm gonna walk through, is how you can invest in a traditional security. So let's see. Step one. So in this case, Rachel, Mary, and George, they have a joint account in the D7 system. But instead of owning a pizzeria and running a pizzeria, they basically they purchase U.S. Treasury bonds, and they hold those U.S. Treasury bonds probably in a trust. I mean, it's up to them where do they want to keep them. They can keep them in their personal accounts or whatever. They hold those bonds, and what then happens is, if Janice is saying she wants to sort of to have a stake in U.S. Treasury bonds, and so she creates a stake in their joint account, and just like she would do with the pizzeria. And so she creates a stake, and in this case, we're going to use the numbers that are here, right? So a stake in the U.S. Treasury bonds for this joint account is worth 8 D7 credits, and so she can create 16 of these D7 credits, and then she can then optionally gift whether the joint account, the bonds joint account. I don't know if they would rather have fiat currency in this case or the D7 credits. They could always trade the D7 credits for fiat currency. But let's say they gave her, she gave them the fiat currency, the US dollars in this case. And then they turn around. So step one, she creates a stake on this friend's US Treasury bonds joint account. They might not be her friends, but they might be. And then in step two, she can give them a gift, which she did. She gave them some US dollars, 8 US dollars in this case. Janice or the joint account, they can ding one another on the transaction if they choose to do so, or I don't think they did in this case, but okay. So then with the gifts from Janice, the 8 US dollars that she gave them right here, Rachel, Mary, and George turn around and they buy US Treasury bonds, $8 worth of them. And there may be some kind of a fee and slight fee involved there for their, the effort required to go purchase them. And so it might be not exactly $8, but something like this. And then they hold those in a trust. And so in a sense, Janice then has a stake in US Treasury bonds in the same way that she would have had a stake in the pizzeria. And she has exposure to that the bond US Treasury bond market. And so the value of her stake would go up and down with the value of the underlying asset, which in this case is the US Treasury bonds. And then at some point in the future, if Rachel, Mary, and George choose to sell the US Treasury bonds, they can do that, and they can sell those bonds, and they can buy back, do a stock buyback, but in this case it's a stake buyback, so that the value of the stakes for their stakeholders doesn't decrease over time. And why would you do that? I mean, for one, you're using the platform, so it encourages the use of the platform, and so that's valuable if we want to shift to these democratic economies. But also, she gets a 2-for-1. Basically, when she when she creates a stake in this U.S. Treasury bond, she gets two D7 credits for every one credit worth of the bond, and so she gets 2 times her money back initially, and she can take those D7 credits and do with what she wants, invest them somewhere else or whatever. And so there's that advantage as well. The other thing I wanted to mention here is, in the case of the joint accounts, the joint account doesn't the joint account holder doesn't need to note the total number of stakes or stakes outstanding, right? Because they would basically just purchase any number of U.S. Treasury bonds based on how many stakes get created, and the number outstanding is defined by the traditional market, so there's no need for them to determine an upper limit, but they could note a suggestion given.
So some people had asked, how could you make money by investing in a nonprofit? And so I want to chat about that for a second, and then also how would you make money based on investing in some of these other organizations? And it depends on the organization, obviously. But one way you can do that is if you invest in a nonprofit, you would probably do so based on the expected donations. Well, instead of expected revenue, it would be based on expected donations. And you'd price the stake based on that. And then if the donations go up, then the value of the stake goes up because the nonprofit has used that money to reach new donors, or they did like some marketing, or they took on some new initiatives that attracted donors. And then at some point, if the nonprofit has fulfilled their mission, then they could roll that into a different nonprofit, like they rolled a stake into another stake or something like this. Or they can rechange their mission or something like that. So I wanted to mention that here, if you have a stake in a nonprofit, the nonprofit could also give a regular give back to the stakeholders. At first that seems, kind of strange to me. I was like, why would you give money? You usually donate money to a nonprofit, right? So then they have the money to run their operations. But in the beginning, nonprofits need seed money. And right now, most of that seed money, or a lot of times that seed money sometimes comes from wealthy individuals. They might crowdsource it too, but we might end up having more nonprofits and more mission-driven organizations if folks have the option to invest in nonprofits versus invest in corporations or other for-profit entities. If those nonprofits could give back a dividend of sorts as a gift back to the stakeholders. And so that might be an option for nonprofits and to help us move toward more mission-driven organizations. Or they might choose not to do it that way. And there might be some other way that I hadn't thought of yet. But Sure, other people will probably have ideas on that as well. So, if you have a stake in other organizations like employee-owned organizations or LLCs or other type of organizations, it depends on the organization as to how you would price that stake. It depends as to whether or not you would expect to receive some kind of a gift back from them in the future. And so if you were expecting to receive some kind of a gift back, like similar to a dividend, then you might price your stake based on that. Or you might price it based on revenue. It's also possible that, it depends on the organization. They might say, well, we're going to do 1% of revenue or 2% of revenue or something like that. Well, that's what we expect to get back as a gift to the stakeholders. And then, or they might take that money and invest it back in the organization for growth, which also would be beneficial for the stake because the stake would grow as the organization grows. And so there's a few different options there. So I'm going to talk briefly about how we would stabilize the D7 currency. And the D7 currency, unlike the US dollar, for instance, or even Bitcoin, the idea is that we stabilize the D7 currency together as a group. And so if there are times when the D7 currency is falling for whatever reason, we buy up the currency to make sure it maintains its value. If we want this to work, it's a group effort, essentially. And in the beginning, 1D7 credit equals $1. I thought that would be a good starting point. And then from there, it can go up and down with global property values so that we can eliminate inflation in that way. And so we do our best to maintain the value of the currency. And also, for the software part of it, we don't produce too many D7 credits so that it gets devalued too quickly, too fast. And so that's another piece to this. Just like Bitcoin limits how many Bitcoins can be produced, we would do that as well. And this D7 go live is once the software is written and built.
So I think that wraps things up. Thank you so much for listening and for considering this. And if you are going to start another democratic economy, it would be awesome. We'd love to hear from you. If you have any feedback or would like to make any proposed changes to the D7 system, either features or changes to the democratic processes, you can propose those on the website. If you have any questions, you can post those on the website, or you can talk to us at an event. Thank you all for listening.